Guys, welcome back to the channel, welcome back to a new video. This is going to be an absolute jam-packed episode. If you like the content, please do me a favor, like, subscribe, click the bell, click on all so you don't miss anything. Leave me a comment or share the video with your friends if you think this is useful. And of course we are going to dive into Btc USD, but we also have a lot going on for the news this week, what is coming out later. To first jump into that, on tomorrow, Fed Chair Jerome Powell is speaking. That usually gives a little bit of volatility, but the real gem is 2 days later on Thursday. Then we have CPI data, United States, coming out. That is inflation data. This is, together with the interest rate hike, the most important data that can come out for us as traders. We had a consensus, or a group of traders and investors had a consensus that inflation will go down again to approximately 6.5%, coming off 7.1% of what it is right now. So the expectation is inflation will go lower again. Same is for core inflation, from 6.6, 6.3, 6, and now then to approximately 5.7%. So every time 0.3% off. That actually would be very, very nice, and that will not miss its effects on other markets in the world, but of course most important for the United States and then for us as traders, because if the news and the data that comes out is good, then probably stocks will go up again because the inflation is coming down, but they also see that the Fed is getting less and less reasons to keep on hiking interest rate hikes. You know my standpoint. I do think that they will keep on hiking, probably on a lower level for at least the next 6 months to come, but we need to just keep this kinds of news in mind when we are traders. Like I said, that we might pump higher. As I said earlier, and now we're really going to dive into BTC, is that we are reaching resistance, and that is here the value area high is exactly where we are rejecting right now. That is at 17,250, 260-ish. Doesn't mean that right away we are rejecting and going lower. Every range is a range until we break it and we go stage higher or lower and then make a new range. And also we can spend some time above the value area high before we eventually are dropping down again and then just trading lower till the value area low. So it's not that black and white. I have to say, on the bigger market Cipher B indicators, and then on a high time frame, it still looks good. I said last week, be careful with shorting these bearish divergences, because it looks like that the money flow wants to come up and we don't really see very strong signals for us going lower. Well, if you would have shorted that, then I hope that you had your stop loss right at the beginning once we went down just a little bit, because you would have stopped out every time. Now I have to say that the setup for a short is already getting a bit better, because this momentum wave here on the 4 hourly is pretty high. Would I short it right now? No, because the money flow is still pretty thick up. So maybe we do get something like a bigger bearish divergence on the 4 hourly, and that the next wave up is really breaking through that value area high and eventually going lower again. What could be a level on the 4 hour for us to reject? Well, then I always like to use the FIB retracements, and then we have a level, and then actually I want to make it an area, and not really an exact level but an area, and I will show you in a minute why that is so much better applicable. So that is starting off from 17,000, let's say 500 to 17,650. We're talking about an area of approximately 1%. That is my preferred area. Why? Because, let me take this. Then we have a breach of this level, so we're taking liquidity above these two 4 hourly candles. We have then also the golden pocket, and this is also, as you can see, a nice resistance, because we had a few candles here that then just bounce up again. So this whole area would actually be a super nice area for us to break and then eventually go lower. So let's say we do something like this, and this will then go low, or sorry, higher, and the other one goes lower. That actually would be nice, but I also want to see that money flow at least already coming down a little bit. On the 1 hour, it looks already a little bit better, but this 1 hour candle actually also sets up for a very nice bearish divergence, because it is pretty high, and you want to have, of course, the first one nice, fat and high, and then retrace a little bit and then make a new one, and then eventually going lower. On the even bigger time frames, so the daily, I have to warn you, be careful. I said it already last week. I don't think that we will go down anytime soon. I maybe expected with a flat weekend that we might print a red dot, but that didn't happen. We had a tiny bounce during the weekend, and you can see that the money flow is still up. RSIs are pointing higher, VWAP is higher, money flow is in the green. This needs time to curve down. So I expect throughout the week that we are going a little bit higher, and maybe then on the data or on Friday that we eventually go lower. Depends on the speed. So far we have missing the speed tremendously for Bitcoin and the altcoins. Now we got a little bit of a pump last weekend. With that being said, that pump from last weekend also gave a tiny CME gap, approximately 1%, nothing major, but it is something to take an account of. Doesn't mean that it gets filled, but sometimes the bigger the gap, the bigger the chances it does get filled. And it doesn't mean that it has to be then right away on Monday, the first trading day. It can also be on Tuesday, Wednesday, Thursday. So just keep that in mind. If you go to indicators and you type in CME gap there, you can also find all kinds of indicators that show you the CME gaps on the asset that you're checking or charting or trading. So definitely check that out, and it's very useful. Just a few mouse clicks and then you see right away what the gap is. But like I said, it's approximately 1%. Let's say we are going down. So again, I am looking out for shorts around these levels and around the level where we are right now. I really want to see top out on the bigger time frames. If we would go even higher than this, then I would be looking out for maybe taking liquidity above this high, but I wonder if we have the pace. For whatever reason we are going down, then you can just do the exact opposite, and then I would be looking out for maybe first a support. A bigger support is around, let's take this candle, the golden pocket at 16,600 to 16,650, but you can also day trade it to just put this one, let's say on this candle. That actually would also be nice. Then we go down at 16,900, 16,880, and I can tell you, if we are going down here, then we filled the CME gap. That's around this level. So the CME gap kind of ends here. So if we would go down for whatever reason and we find support here at the golden pocket, we filled the CME gap, and then we had a nice retest to the golden pocket, I will definitely play that for a long. And of course then we can just also wind down to put it on bigger levels. Like I said earlier, 16,600 ish for this very big golden pocket, but we could also go even further, 16,000 16,000 to 16,150 for this golden pocket. But it's I think the way I'm looking at the chart right now, I think maybe some sideways action, but eventually we're going higher today, tomorrow, maybe Wednesday, and then eventually when we top out, it's time to really enter a short. This would be a super nice clear level if we top out from here. A reclaim of this level and really going higher. To be honest, this candle, this SFP, it is not super strong. We don't have a lot else on this level. So if we march higher and higher and higher, then we should really look at much higher levels, but I will do that in a different video, one step at a time. Let's be honest, it took us quite some time to pump up just a few percent. If you're looking here at Friday 30th of December, this was the bottom, and now we are 9 days further, almost 10 days further, and we're talking about 4.8%. Back in the days, that was what we did during one day, and now it took quite some time. Last but not least, a quick look at the DXY, the dollar index. Our big bullish divergence on the daily chart is still in play. Here we had some price action on Friday, some news coming out, spike up, spike down. But eventually momentum wave is still creeping to the upside, and the price has not yet made a new low. So far it still looks good. I noticed on the daily, and yes, it takes a long time to play out, but this scenario is still valid, and I'm still looking out for a lower high or an equal high here. But that once that happens, let's say that we need 1 or 2 more days here in around the 103 level, kind of where we are making this base right now. That actually would then probably give some time for BTC to go higher. Eventually this turns, really then completes that big bullish divergence, and then BTC goes down. That will be a perfect harmony. Alright guys, you now kind of know what I'm looking out for today, the next couple days. I will trade actively this week. If you like the content, do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. And also leave me a comment. I also very active on Twitter and Instagram, so don't forget to check that out. Thank you guys so much. See you in the next one. Bye bye.